I want your thoughts on CSB Bank as well, because we have the management with us. It reported a robust Q4 business update. Pralay Mondal, the MD and CEO at CSB Bank, joins us now to talk about that. Mr. Mondal, good morning and thanks a lot for joining in. Can you tell us a little bit about the business overall? What kind of growth are you expecting to see? Because your deposit growth was almost 22%, and the gold loan business did quite well this quarter. What are the big trends that you're noticing here on, and what could the growth be in FY25?
Good morning, Sonia, and good morning to your viewers. Yes, we had a reasonably good quarter and overall good year in FY24. The deposits grew by around 21, a little more than 21%, and assets around 19%. Gold did grow more than 21%. Going ahead, I think we will sort of be steady in terms of what our guidance has been. In terms of growing faster than the system by 30 to 50%, I think we'll continue to do that. And a large part of our focus has been to focus on deposits and liability, because as you know that the system liquidity has been under a little bit pressure. So to sustain a good franchise in the long run, deposit becomes very important. So we have been focusing a lot on deposits, and rest will come. I mean, our franchise is spreading our distribution across North, West, rest of South. Most of the products are launched. The technology we have we're migrating into a new core system in the next 1 year. So a lot of action in the bank right now. So to that extent, I think we are quite positive of the future.
So can you give me some numbers on deposit growth? What are you looking at in FY25? And also, the RBI has been cautioning on loan growth to lenders, asking them to bring down the CD ratio to 75%. Have you had any interactions with the RBI at all? And what's your view on that?
We didn't have any direct interaction with RBI on this. However, we do see in media like yours only that what the discussions happening or what the kind of concerns which are there. And we have to be preemptive in a banking ecosystem which is managing risk, and liquidity risk is one of the things which we need to keep our focus on. So we have remained focused on deposits. So growth in deposits, we will be reasonably good growth going ahead as well, faster than the system. And hopefully our incremental CD ratio, we focus really on the incremental CD ratio. We have brought down our CD ratio in the last 2 quarters, if you look at it quarter on quarter. And even the incremental CD ratio is obviously moving much slower in terms of lower than what even the CD ratio is. So to that extent, we're in a good place right now. And that's ammunition for growth in future.
Yeah. Pralay, hi, morning. On gold loans, there was action against one particular entity. And then, the management went on a call with investors, analysts, etc., and said that, well, everyone actually disburses gold loans in cash in excess of what is allowed. It's like an industry practice. Have you seen any change after, it's been a few weeks at least since then, in terms of how the RBI is kind of regulating this space?
Yeah, Prashant, I think what you said is right. But there's a difference between the regulation or the legalities about what the NBFCs can do and banks can do. So while there are no specific instruction on banks in terms of cash disbursement, but we remain focused because we also don't to handle, because it's an operational hassle as well. So we like to always open an account and disburse in that as much as possible. That's more from operational perspective. Also from a long-term compliance perspective, it's a good compliance to have. On your larger question in terms of gold, I think one needs to be a little conscious that the gold prices have hit almost a lifetime high. And obviously in that case, the LTV and all those things looks very good for the entire ecosystem. And as a conservative, cautious lender, have been always very, very risk averse. So we have kept our eye on that and said that what if there is a potential fall in gold prices eventually at some stage in the life cycle, and how do we maintain our LTV and how do we ensure that we manage that part? So to that extent, I think one of the reasons regulators are looking at it is that gold is a commodity, volatile commodity. Things can change, though. Overall, the way the dollar index is going, etc., doesn't seem to be there is, who knows, but doesn't seem to be a big risk at this point of time. But one needs to be cautious. from our perspective, our challenge is different. We want to diversify our portfolio a lot more than what it is today. And to that extent, I think we are focusing a lot more now. You will see us building our wholesale franchise. We have got new management who has joined our wholesale as well. SME is doing well, building retail. So I think for us, it's a mix which we need to change over a period of time.
All right. Hi, good morning, Mr. Mondal, and always good to see you. When, higher gold prices, do you see a positive impact on gold loans? If you could give us your sense, because I've got some mixed feedback in the past few days. That's point number one. And whenever you join us, you tell us you're looking at, the gold loan proportion coming down, I think, from this 48-50%, closer on 20-25%. But every quarter, you're seeing that the gold loan portfolio actually is outgrowing the ex-gold loan portfolio. How does that happen then?
Yeah, good morning, Nigel. In fact, we discussed it last time as well. Yeah. I said that till FY 25-26, we'll see this trend because it takes time to build retail and wholesale, those kind of franchise. We are putting those inputs in place. FY 26 onwards, we'll see a glide path of our gold loan going down to 20% by FY 30. That's very clear, and that will do. Having said that, on your first question in terms of gold prices and hence the tonnage growth, what we remain focused is what is the tonnage growth and what is the value growth, because there is always going to be a difference there depending on whether gold price is higher or lower. And to that extent, being a risk-averse kind of a person or a bank, we want to be a little more cautious when it's at a lifetime high. Obviously, there's an opportunity of value growth, but we are clearly focused on the tonnage growth. On your question on mix, you will see that change happening starting from 26 onwards. I'm pretty confident of that.
All right, Mr. Mondal, just one final question on the credit costs. I wanted to understand what is the trajectory that you're looking at on credit costs, and by when do you expect it to pick up?
See, this year also, I think at least till the time the numbers are out, which is third quarter, we were sort of close to zero, the credit cost. I don't see too much change happening in the fourth quarter as well. A little bit here and there. Next year also, I don't see how it will go beyond 10-20 basis points in terms of credit cost. So, and that's quite a conservative number, what I'm talking about. So I think to that extent, at least one more year of pretty comfortable cushion in terms of credit cost. And then as the business picks up, as who knows how the cycle comes in the process, then we'll see. But we will pretty much, as we are talking, we're pretty comfortable on the credit cost at this point of time. There could always be one case here, one case there that can happen in the wholesale side, but that won't move the needle that much.
All right. Pralay, thank you very much for joining us. It's a pleasure having you with us here on CNBC TV 18. Good luck, and till we speak again.